So last night I was laying in bed before I went to sleep, and I was just being very grateful for how far I've come in my trading journey. And I was looking back at all the milestones that I've been able to achieve in 2023, and just kind of reflecting of on everything. And I couldn't help but to think about the 95% of traders that fail in the market. And whilst I was reflecting on that, I started thinking about all the things that those 95%, those majority are doing wrong, which I was able to overcome as a trader myself throughout my journey to help me become profitable. And so I felt like making this just raw talk video on just the things on my mind and just expressing the things that you guys may potentially be doing wrong, or the things that you guys may not have implemented in your strategy or in your trading journey, which may be stunting your growth, which may be delaying your progress, or you might even be taking steps backwards in your trading journey. And so I feel like definitely watch this video in its entirety. I will put timestamps as well, so you guys can skip to the parts where you find it more useful, or you feel like it relates to you more. But I feel like this is something that everyone needs to hear, even the profitable traders among you, because it could be something which can help you improve in your journey as well. So the first thing, which I feel like is definitely preventing a lot of people from becoming successful, or is is the cause of a lot why a lot of people quit in this industry, is due to the fact that we need to start managing our expectations. Now, a lot of us, including myself, we came into the trading industry because we had great expectations from this industry, great expectations from the market. We saw that flashy lifestyle, we saw the cars and the watches and the money and the private jets in some cases, and that really hooked us into this industry because it gave us a way out. It gave us a way to escape from our normal average lives, as per se. And I feel like when we come into the market, yeah, I feel like it's okay to come into the market with the because we've been drawn into that lifestyle. However, there's no longevity in that. So for example, for me personally, when I was 15, 16 years old, I was so vulnerable to that lifestyle. That's what attracted me the most. But I quickly realized when I started studying the markets that this is something that I really like. This is something that I'm passionate about. This is something that I've fallen in love with. And over the period of 1 to 2 years, when I was learning how to trade, I was not making a single pound or a single dollar from the markets. However, I was still on the charts daily, grinding and balancing school with that, because it's something that I loved. And I would even tell my friends and my family that I don't care if I make £0 from trading my whole life. It's something that I'll never give up on. It's something that I'll either become successful in or die trying. And that's the sort of mindset I had, because although the money attracted me, that then became the byproduct, and trading became my why. Trading became my passion. It's something that I loved, and being analytical myself is something that I could implement in my trading, like gathering data and testing different variables. It's just something that really connected with me and really resonated with me. And so I feel like if you have the expectations of making crazy money and living that crazy lifestyle, you won't really have longevity in the markets, because you quickly realize trading is no joke. It is very difficult, and you need a higher purpose, a deeper why to keep going, to really remain in the markets for the long term, because this industry is definitely a marathon and not a sprint. And for all of those that feel like, oh, will become successful in the next 3 to 6 months and have this lifestyle, are the people that end up quitting and becoming a part of that 95% of the traders that fail. Now, the next big thing, in my opinion, is definitely by far the lack of education. And it's quite ironic, because we live in a time and age of information where everything is widely available on the internet, but yet there is such a huge lack of education, due to the fact that there is also misinformation out there. Although there can be a lot of helpful educative videos and blogs and websites on the internet, which is something which is personally how I learned to trade. The opposite is also true. There is a lot of misinformation, and if you get hooked into the wrong sort of crowd and the wrong sort of marketing gurus, you will start to stunt your growth, and maybe maybe even start taking step backwards, because the lack of education and not learning the right things is something which is very detrimental to your trading journey. And I feel like some of you some of you may buy courses, and at night you may backtest or just do some research on the internet, and you feel like that's progress. However, in my case, or however, in my opinion, I feel like just because you're taking actions, you're taking movements to make yourself feel better, and telling yourself that you're learning how to trade, in fact, you could just be wasting time learning the wrong things just so you can fulfill that desire in you, or that sort of emptiness in you, which is kind of telling you, oh, you're not being productive. You need to be productive to become successful. And so you just do anything to kind of satisfy and quiet down that inner subconscious in you, which is telling you to actually learn the craft. And this is where a lot of people fall victim to signals and account managements, because they just solely rely on that, and they never take the steps to learn to trade properly. And yeah, some of you guys may take the right courses. However, then the next issue becomes not back testing that approach. So for example, like I said, I'm a very analytical guy. I like to test each and every single variable and make sure everything is working and everything is actually correlating nicely with my strategy. So for example, for me personally, I have a huge backlog of years and years of trades that I've taken in the markets. And one of the things that I test within the trades that I've taken is the average drawdown. So every single trade I take that ends up hitting TP, I make sure to record the average drawdown that trade went into before it hit TP. And the reason I'm doing that is so I can refine my strategy and improve my risk to reward ratio. Again, I can only do that if I'm collecting data. I can only do that if I have that analytical approach. I can only do that if I'm actually genuinely putting in the time and effort into this craft. So for example, let's say my average drawdown per profitable trade is 30%. Now that means that 70% breathing room that I've given the stop loss is quite unnecessary. And I could, if my stop loss is 10 pips, I could just drop it up to 8 pips instead of going up even deeper, because I do understand some trades do go into drawdown a bit more than others. And so instead of having that 10 pip stop loss, I could have that 8 pip stop loss, and that immediately those 2 pips will improve the risk to reward ratio a lot more. And I can only do that if I'm genuinely going through my trades and seeing how I can refine it. If you guys are just taking trades without journaling it and without having the right data that you're recording, it's going to be pretty useless, because you're just wasting your time. If you're taking a trade and it ends up being a loss, and the next day you've forgotten why that was a loss, or you've just written a little small sentence or two explaining why that was a loss, 1 year from now, when you have to look back at all your trades to do like a re-evaluation to see where you can improve, you're going to be clueless and you're going to be lost. And that period of time where you did not record your data was just a waste of time. Yeah, you might have gained some experience. However, what use is that experience if you've forgotten it? What use is that knowledge if you've forgotten it? And so I feel like everything you do in your trading journey needs to be logged, needs to be recorded, and you need to be able to backdate it, so you're able to then experiment and use different scientific approaches to improve your trading. So for example, you may want to test to see if you're able to determine the direction properly, right? And so that would be your hypothesis. You might be like, if I see a doji candle followed by a bullish engulfing, that means price will continue bullish. Just a random example. And so that's your hypothesis. And now you want to test that. Now to test that, you need to make sure it is a fixed variable that you're testing. You do not want 2 or 3 things influencing that single variable, because then that will not give you the accurate results. And so the fixed variable that we're testing is if we're getting a bullish engulfing after a doji candle. And so by testing that and then recording that data, you're able to go through a trial and error process to then refine the strategy to see if it actually works. And you may come to realize that, you know what, just a doji candle in itself at a significant level is enough to give you that push you wanted, and a bullish engulfing isn't really necessary. But you would not have known that unless you experimented and went through that trial and error process and spent months and even years refining your strategy to get to that approach. And I feel like that is what gives traders like us an edge over you guys, because I guarantee you a majority of you traders cannot tell me in 2022 January the 26th what exact trade you was in. If you're not able to tell me the exact trade you was in at that point, that period of time was just a waste of time, because you got no data to tell you and to explain to you what you was doing wrong then. And even if you do have data, if you're not collecting the right metrics behind that data, again, are you really spending your time as best as you possibly can? And I feel like you guys should sit by yourselves and really reflect on these things and see what other data you can be collecting to see how you can improve. Now that leads on to my next point, which is laziness. Now I just went on like a 5-6 minute ramble on why and how you should be testing these variables and the education that you should be taking. Now some of you might have just already clicked off the video, and that's exactly my point. Being lazy and being not tuned in and listening to the right information is what is going to stun your growth, because you're only accountable for your own actions. With trading, you are the person that is reliable to give you those outcomes. There's no one else, there's no other variable. It is you against the markets. If you're not willing to put in the time and effort, if you're not willing to backtest, if you're not willing to collect data, if you're not willing to invest in yourself and educate yourself and see the trading industry as a long-term move as opposed to a get-rich-quick scheme, if you're not willing to do that and you're just lazy and you want to make that quick money, you're not going to last in the markets for very long. There is no longevity in there for you. And yeah, I do understand that a lot of you will have jobs as well which you need to balance, and so after you've done your 9 to 5, for example, and you've come back home, you may be tired, or you may not have enough time to really study the markets. And at the end of the day, it comes down to how bad you really want it, because trading is as hard as it is, and then to not be willing to put in the time to learn the craft and to educate yourself. And the best of teachers is experience. If you're not able to spend time in the markets taking trades and trading different sessions and gaining that valuable experience, you're really not going to make it far, because yeah, the theory and the course and the education will only help you so much. At the end of the day, experience is the best of teachers. Experience is all you really need in the market to become successful, because it's through experience you would learn different patterns. It's through experience you understand price movements. It's through experience you understand how to control your emotions. Now that's another thing. How are you going to manage your psychology by reading a textbook on, I don't know, your psychology of trading? That's only going to help you so much. It's easier said than done, and really experiencing it for yourself as opposed to reading a book or watching a YouTube video is what really determines whether you become successful or not. So for example, take me as an example. Me being in the markets for so long and being able to control my psychology and understanding what emotions I'm feeling when, and having a set of rules to follow when I do feel those emotions, and having that recorded in a Word document will give me an advantage over you. Whereas whilst you might be panicking because you're in X amount of drawdown, I've got data to back up that, or I experience that sort of drawdown on an average basis, so it's nothing out of the ordinary, and I'm calm and I'm stable, and then the price comes up into my favor and into profit, whilst you've closed out early whilst you're in drawdown, and then you're kicking yourself afterwards saying, if only I held. And that sort of emotional roller coaster is only going to be overcome through experience. It's only going to be overcome if you spent time in the markets. And so I feel like laziness is going to be your biggest enemy when it comes to this, because trading can get boring at times, and it can get very repetitive as well, because you're doing the same thing again and again and again. And if you don't have that deeper purpose, like I said, a deeper why, and if it's not your passion and you're just doing it for the money, you really won't last long. And this industry and the markets are very good at sussing out who really wants it bad enough and who's just in it for the vibes, who's really in it for the money. Now the last thing that I want to touch upon before I end this video is risk management. Now there's been countless number of times where I've seen profitable traders, where I've seen successful strategies, where I've seen people putting in the time, like I said, putting in the effort, collecting data, actually being consistent, being profitable, but then there comes that one time where they just end up risking a crazy amount of money and just blowing their account, and it just resets all those years of progress back to year zero. And I feel like risk management can be your biggest enemy, because if you're not managing your expectations, and it all at the end of the day ties in together. If you think of trading as a sprint and you're not managing your expectations, you're going to be risking big, because you want those big profits and those big outcomes, and all those years of building that account can just be blown away by one silly trade, or by 1 week of poor psychology where you're just over risking and over trading and over leveraging. And I feel like if you don't have that discipline in your lifestyle, you won't have that discipline in your trading. And I feel like to become a successful trader, you need to be disciplined in your day-to-day life. You need to have your life together and not depend on trading as your only source of income, because having that sort of pressure and having that sort of burden on you to make trading work, otherwise you're not going to be able to pay the bills, is going to be a huge playing factor as to why you won't become successful. And so making sure in the beginning of your journey you're risking 1 to 2% of your account balance, and being consistent with that, collecting data and just using data to make the next decision. So for example, an ideal case scenario would be if you have £1,000 account and you're risking 1% per trade, and you see the first quarter, if you've become profitable, or if you are profitable in that first quarter, then if you want, you can increase your balance, or you can increase your risk to 2%, and then see how the next quarter goes. And depending on how the next quarter goes would determine if you can increase your risk or increase your balance. If you're comfortable risking 3%, sure, go for it. Your data is there to back you up. Your data is telling you that you're profitable and you've been making a consistent income, so you can risk 3%. And then once you're risking 3% at the third quarter, you can then see if you're profitable then. And depending on your data, you can then increase your balance from 1,000 to 2,000, and so on and so forth. And using data to make your decisions is much more valuable than to use your emotions to make the decisions. Instead of saying, oh, I feel like I'm good enough, or I feel like I'm profitable, you have your data to back it up. So if a third party was to look at the statistics, they can also vouch for you and back you up and say, you know what, you are worthy of increasing your balance, you are worthy of increasing your percentage. And having that sort of analytical approach, as opposed to an emotional reasoning as to why you're profitable, or as to why you should start over leveraging, is better. Yeah, so these were just some of the thoughts that I had in my mind, as to why I feel like 95% of traders fail. If you guys did relate to any of these points that I've made, or you feel like there's more points which you can add to this, be sure to drop it in the comment section down below. And other than that, I'll see you guys next time.